Well, good day, all. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up. And this is for December 1st. Hard to believe I'm saying that, 2022. Well, it's the day of the meme boys. They came out and they're buying AMC, they're buying GameStop, they're buying all the things you normally don't buy because they're feeling that they've got control again of the market. And they might. You know, AMC, I was talking in my office today, and I was telling people this is the time of the year where they make money. So when the market was down at this $6 level, $5.50, I was telling people you can't be short going into this time of the year. This is when you release the blockbuster movies. They do the best they can. Netflix threw a twist at everybody trying to do a release, and we won't know how it's done. But it's clever of them to have done it the way they did. Maybe that's going to be the future of movie theaters, working with Netflix, Amazon, Disney in different ways and getting the movie theaters to have product. I don't know. I'm always open to ideas, and that was a good one as I see it. But as I look at everything else around me, even ARK came off the $34 level, so you've had a rally. But tomorrow's so important because we get the all-important jobs number. And I'll come back to that in just 1 second here. I want to remind you, though, that what's coming to an end soon is my Cyber Week sale. I have already told my staff and my IT department that all of these prices of courses are going to go up approximately 30 to 33%. And they'll put that into place next week. You get this for free anyways with any 1-year subscription to my different services. And those prices, no, I haven't said those are going up. So this is your way to save some money. You can give these as a gift to whoever you want. I will finish up this weekend, by the way, my outside day course. So it'll be in the hand of my IT. They'll wrap it up and get it so it can be released probably in a week or so. Again, any one of my 1-year subscriptions to research. For those of you already a subscriber, we've given you a way to up your subscription in different manners, and you can take advantage of this. Let's assume you don't want to do that, but you want these courses. Make a run for it right now, my friends. I'm telling you, the price is going up, just what I said, at least 30% in most cases, starting sometime next week, ideally. To get, by the way, to any area here for the special of the Cyber Week, just give a click right there. If you want to buy the course on your own, just go to our website at iraepstein.com and under the word education, and they're there. You got your warning, right? Okay, so let's go to the markets now and talk about what tomorrow's going to hold. It's the jobs report. Now, we are seeing wobbling in certain things. If you looked at the Challenger grade numbers today, you saw from a year ago at this month of the beginning of December, right? 400% increase in the amount of layoffs that are happening. So you're seeing corporations everywhere trimming staff, especially in the tech industry. You're just seeing it all over the tech industry. And this is part of the world getting back to normal and still shedding the impact of pandemics. In my full research report tonight, I'm giving you a report that I read today that is so important. Because China held with the zero tolerance, the immunity level in their society in mainland China is not what it should be up to. Not enough people have had it. If they were to just go cold turkey and say to everybody, we're doing no more lock-ins, they're begging for a problem. I didn't realize that till I read this study in the reports. And wait till you read it. It's quite fascinating. So what I thought they would do, as I said, they're not going to throw the switch and they're suddenly going to change, but they're certainly looking at the demonstrators. They're certainly looking at people saying they've had enough of this, and they're going to have to rush and change things around. It's that simple. This is another way to look at it. Going back to the market, yesterday people, for whatever reason, they didn't hear the Fed chair. And what he said was, yes, it might be time to move away from 75-point hikes to 50s, maybe a quarters, 25. He didn't say they're going to stop raising rates. In fact, what he said is he has no idea how far and how high rates have to go to beat the animal called inflation. But not only are they going to do it, when they get up to whatever the number is, they're going to stay longer at a high rate. Do you think that's super bullish the stock market? I mean, you could be adding from where you're at now another 1.5. Who knows? That's the problem. And so I take a different attitude than most people do on that. I listen to the Fed. I believe the Fed chair. At the end of the day, Buller doesn't run the Fed. Daly doesn't run the Fed. One man runs the Fed, and he just got reappointed. His name is what? Powell. And if he says they're going to stay longer, and he's saying that he doesn't know how high it's going to go, and he's giving you already that maybe they won't have to go 75 basis points. The reason it's not for certain is he wants to see the report tomorrow morning, the jobs data. Real important, this jobs report. If it's weaker, you've baked in 50 points, maybe a 25 if it's a super weak report. I don't think the Fed would go to the 25. It sends the wrong message. I think they back off very conveniently to a 50-point break. If it's a strong report, where it means instead of a drop, you actually see an increase, you've baked in longer and higher. Why go through that? It's too hard. It's a report you don't know. The Fed didn't know what it said. Let's see it and then make our decisions. So this weekend, when I do the weekend reviews, I'm going to be on all the weekly charts, obviously. Going to be an important review for my subscribers. You'll see some of it because we do this on the weekend. Maybe tomorrow night I'll even do it. It's a Friday night, but maybe I'll knock these off for you tomorrow night so you can think about it over the weekend. All right. When I look at BTU stalling, it should stall. We want to now see what OPEC's going to do. They meet this weekend. Are they going to sit pat? Are they going to do another series of cuts? The European Commission has gotten tentative approval from the European Union, the 27 members, of a cap price of $60 with a 5% buffer that they can go back and forth in so that they don't have to have a meeting all the time. That's not going to make Russia happy. So the prices are coming down, and if Russia, whether they like it or not, you do realize about 90% of the financing for the shipping, insurance, and so on comes out of Europe for these Russian tankers. Russia wants to play a game with these people, wrong people. How do you ship anything? I mean, I guess China can pay and insure things. India can do it. He's only got 3-4 clients that are left. There's going to be a problem here. I'm also looking in Russia, which was fascinating, at the amount of resumes going to Turkey, Georgia, different areas around there that are friends of Russia. Unbelievable how many people are trying to leave the country. So between the war going on and the other parts, you look at that and you see these different reports. It's not the easy game you think. When we take a look at the swing line, higher lows, higher highs, trend is up. The market is sitting over the 18-day moving average of closes. We define bias this way. If the market's over that number, the bias is up. So if the swing line's up and the bias is there, you're looking for ways to come into the market on the long side. But where are you in a resistance point? You hit your Bollinger Band for the first time since back here at the beginning of November. So long, the smart money's going, you guys play over this weekend. It doesn't make sense. I'll wait and see what's going to go on. And are you going to embed? Embedding happens when the slow stochastics are sitting here over 80 for several days in a row. So you had today, you had yesterday, and the day before. You have what we call your embedded reading. If it's lost with the red line closing under 79, it's at 81, then I look for the retracement to 29.10 or wherever the 18-day average is and what it'll do. Do I think the market's going to be able to stay over the upper Bollinger Band? No. I think that that's a big resistance point. So the money was just made, and the smart money's going, I got my money in hand, I'll sit back and take a look. When you go to the LIT, which is the lithium, well, you've broken the downtrend. Remember what we talked about. The past 2 days, I pointed out to you that I thought this market would come back and make a run for the 18-day average. You've done it. You're back to neutral. And the reason is when you break these trends and the momentum turns, markets like to go to a spot they're comfortable with. Now, you might say, I don't know if it's the 18. Okay, is it the 19-day average, the 20? They're also similar. I found the 18 to be the best for the way that I like to handle charts. In Apple, okay, I read a report today where they're going, don't be so quick to write off those 6 million lost phones and what that's going to mean one way or the other for lost sales. Well, it is a lost sale for Christmas. They may come back, but that shortens the life because Apple 15 is going to be coming out sooner rather than later. Remember, it's already 3 months almost since we've seen the release. I love my 14. I mean, it's such a vast improvement. It's a great phone, but you can't get them. So that'll cut that down. And you can say all you want. I see a big resistance point. I'd rather not be in that market. In Disney, this is the big event. AMC went up in one of the most volatile markets today. Why not? I owned a movie theater. This is when you make your money. If you don't make it right now in this, let's call this a 6-week corridor from Thanksgiving right into the first of the year, you're not going to make money because the big blockbusters don't come out in January again or February. It isn't going to happen. They'll wait for the spring, and that's when the next big round comes. That's how the movie theater operates. So this is the perfect time when I'm watching all these big calls being bought and all. I get what they're doing. They're betting that the movies that are going to roll out now, that's going to be it. People are coming. They'll go back to the theater. It'll be fine. And you can see that, and it's a big jump. But remember, that stock was up, 1,200% in 2021 or so? And now it's back to being, it was a $6 stock, so now it's back to $8. Okay. XLF, I'm looking for the pros to take money against this upper number right here. It's a rough market here because the jobs report is going to have a big impact on all this. But the financial services has got to be looking at it this way. The 10-year on dropping in value, and the Fed's going to keep raising that front end. What can they make in between? Is their mortgage business going to come back at all? That's another question you got to ask yourself. You get down under 6% eventually, well, people will do something. I was reading today of you can buy $1 million home with the 3% down, an article. Okay? What's your interest rate? If you can afford the $1 million home, I'm assuming your debt service to your income is going to carry it. But now instead of 10, 20% down, 3%. I told you, people get clever. I got this gray hair. I've been around this horn. Businesses don't shut down. People figure out how to adapt with it. And then the person that buys that, they learn the refi game. There's so many things that go on. You don't completely shut these things down. For your older guys like me, am I right? Okay, there's always something. In the industrial sector, I'm watching this. I think that if you hit 102.75, you will see profit taking. There is no trend. You are with a lower low, higher high, but this is what's ruling the day. And that has got now today, both numbers went over 80. Agreed? Day before, both were over 80. What about on Tuesday? They were. Were they no, they weren't. I'm sorry about that. They weren't on Tuesday, as you can see. But they came back. They were embedded. They lost it. They got it back. When that happens, until it wobbles again, it likes to go up and punish those that got too short, too fast in the market. And that's just what happened right there. Be careful. If it loses it again, instead of the 18-day average, it could be the lower Bollinger Band that comes into play because you capture a group of people that get over bullish. In the semiconductor area, you're just overbought. You had a bullish crossover. The market has now made the highest high that it's made since the crossover. So it's accomplishing some of what it has. Ideally, I'd like to see it get up to the Bollinger Band, but overbought conditions never attract me. In the home builders, what did I just say? These guys, they understand the game. They're not dead and out. Why are they up? hope and prayer. Here's what they're doing. Oh, please, Mr. Powell, do that. End these rates, make this market for us go so we can buy our homes again and so on. And the public's going, well, everybody wants to buy a home again. We should be buying that. Folks, the game hasn't changed yet. You're getting ahead of yourself. You're over the upper Bollinger Band. Be careful. Not the place to be in, at least in my opinion. There's better areas. Now, copper is one of my favorite areas. But even so, I cover the name of the chart. You hit a Bollinger Band. I don't care what you're doing. You're overbought. Out you go. I have been talking to you here all year that I think copper is going to $5. It's only $3.75, $3.80 right now. I think it's a $5 market. When we get out of this next valley that the market's going to create as everybody gets and beats this inflation and the next real cycle begins. But I don't think it's a $2 commodity. I don't even think it's a $3 commodity. I think it's maybe have seen the worst it's going to see in the near term. TLT. You want to tell me you want to get bullish this, which means rates dropping into the 100-day average in the Bollinger Band. I'm all for it, but that's also the spot to take money off the table. When you hit those numbers, that I believe in walking away from the market. The money gets very difficult to keep making. And on the dollar, the break into the 200-day average Bollinger Band, as bearish as I am the dollar, and I've got bearish and said it here before, the big firms and so on. I said, this market looks like it's made a top. And the weekly charts were really there. But now I'm saying, be careful. You're getting down to a zone where profit taking is likely for whatever reason. I wish I could tell you I know the reason. And that would mean the flip-flop in FXE against the 97.55 level. But again, watch tomorrow, jobs day. And when that comes out, you'll see the action. There'll be time to react to this all after 9:30 in the morning. Yeah, it goes like that. But in between then, who knows what you're going to walk into. The algorithm money has to get placed when the market opens Chicago time in the stock market at 8:30, and it goes crazy, and then it wears itself off, unless the report is a major shock. Then all day long things go on. But I'm not looking for a major shock. I don't know what I'm looking for. That's why I'm standing back on it. What I do know is you can take advantage of Cyber Week. Just move your cursor to the top. Choose any product you want. Take advantage of that right now. I'm Ira. I will see you either tomorrow night, Friday night, or Saturday as I do the weekend reviews for you. And that's when we'll be able to really talk in detail what this jobs report showed. Take care.